beginning today, you will be able to trade in the M-Akiba bond on the secondary market after it was officially listed at the Nairobi Securities Exchange. The move is expected to grow the country's savings as well as hand investors the opportunity to invest in government bonds. M-Akiba has more.
The sounding of the bell at the Nairobi Securities Exchange signified the official listing of the M-Akiba mobile traded bond, which has defied market forces to register one of the highest subscriptions.
The best way to benefit from M-Akiba is to hold it to maturity. That way you get the benefit of a tax-exempt revenue stream, and at the end of that, you actually get your money back.
With our current saving levels of slightly less than 12% to GDP, there was something we had to do differently. So a disruption had to come in, and I believe this is the disruption we've been waiting for.
The listing follows a successful closure of the special limited offer of the M-Akiba retail bond after it achieved the 150 shilling mark. The bond market has been on the uptick, with investors rushing to cash in on the handsome interest rates.
M-Akiba is undoubtedly going to be one of the most powerful savings vehicles you'll find anywhere in Kenya for Kenyans.
So it's actually a first where we're not subject to the vagaries or the volumes in the secondary market. So the investor today has peace of mind that you can exit and enter with a very structured mechanism.
The M-Akiba bond, which closed off last week, 5 days to the set date, owing to the high subscription, had attracted slightly over 100,000 investors who registered to invest. According to market players, the successful uptake of the M-Akiba retail treasury bond exhibits the need for new and innovative products in the market.
Now, the successful uptake of M-Akiba in the pilot is really an testament of the desire by Kenyans to also become and invest in their country.
The listing of the bond comes at a time when Kenya's stock markets have been treated to new products such as the exchange-traded fund, as well as the upcoming derivatives market. With more Kenyans gaining financial knowledge of alternative investment products, the government is banking big on this to roll out the second tranche of the bond by June, worth 4.85 billion shillings to go towards infrastructure financing. M-Akiba, KTN Business.